In the third video of accounting for share capital, we will be discussing two new terms. One is calls in arrear and another is calls in advance. Now, what do we mean by calls in arrear? Sometimes some of the shareholders do not pay the call amount on due date. Okay, so when the shareholders fail to pay the amount on any such calls, that is on first call, second call, then a new account is opened which is known as calls in arrear account or unpaid calls account. Okay, so for that a journal entry has to be passed. Okay, so calls in arrear account will be debited and the respective call, say the first call or the second call, final call account will be credited. Okay, and regarding that, in the Companies Act, if the question or the article is silent, in that case on calls in arrears 10% interest is charged. Okay, you should know the rate. Okay, the calculation of interest on calls in arrear is not in our syllabus. Then calls in advance, sometimes some of the shareholders pay a part or full amount which is not yet been called in advance. Okay, so that will be known as calls in advance account, and according to table F of the Companies Act, interest on calls in advance is charged. Not charges of interest on calls in advance should not be more than 12%. Okay, again you should remember this rate, but the calculation of interest on calls in advance is not in our course. Okay, a journal entry has to be passed to record the calls in advance. Since the cash is coming in, bank account will be debited and calls in advance account will be credited. And when the amount becomes due, the advance amount, that is the calls in advance account, will be debited. Earlier it was credited, and the particular call, say the first call or the second call for which the advance money was received, will be credited. The balance in the call in advance account will be shown as a separate item under the equities and liabilities, okay, of the balance sheet, under the head current liabilities. Okay, now let's take one illustration. X Limited with a registered capital or authorized capital of 2 lakh rupees is divided into 2000 equity shares of 100 each. Okay, 2000 into 100, that is 2 lakh rupees. Okay, issued 1000 shares, offered 1000 shares, application 25 rupees, allotment 30 rupees, first call 20 rupees, and the balance, okay, 25 plus 30, 55 plus 20, 75. So in the second call it will be 25 rupees. Okay, application money on 1000 shares was duly received, the allotment amount was received fully, and but when first call was made, one shareholder who held 100 shares failed to pay the amount, and another shareholder with 50 shares paid the entire amount. That means the second call's amount was also paid, that is call in advance. Okay, now we have to pass the journal entries. First, when the application money is received, bank account debit to equity share application for 1000 shares applications at the rate of 25,000 rupees is received. 1000 into 25. Okay, now the application money will be transferred to the capital account. So equity share application, earlier this equity share application was credited, now it will be debited. Equity share application to equity share capital account 25,000 rupees. No surplus amount is there. Then the allotment money will be made due. Okay, so equity share allotment to equity share capital, 30 rupees is the allotment money. On 1000 shares it is 1000 into 30, 30,000 rupees. Allotment money was received in full, so equity share allotment will be credited and bank account will be debited. Journal entry is bank account debit to equity share allotment 30,000 rupees. Now the first call is made. Okay, made due. Equity share first call to equity share capital 20,000 rupees. Okay, 1000 into 20, 20,000 rupees. Now what the question was saying, that on 100 shares the call money, the first call money is not received. So 100 into 20, 2000 rupees will be debited to calls in arrear account. Equity share is 20,000 rupees. Okay, out of this 2000 is not received, so for first call 18,000 rupees is received, and on 50 shares at the rate of rupees 25, that is 1250 is received as advance. So 18,000 plus 1250, see this calls in advance amount will be credited to calls in advance account. Okay, 50 into 25, 1250 will be credited, and the cash or the amount received in bank is 18,000 plus 1250, 19,250 rupees. Okay, then we will take one more question where equity shares and preference shares both are issued, and in this case we will be preparing the cash book. Okay, the entries will be recorded in cash book, the bank transactions will be recorded in bank column of the cash book. Okay, so see, authorized capital is 5 lakh rupees. It is divided into 20,000 preference shares of 10 each and 30,000 equity shares of 10 each. Okay, company issued 10,000 preference shares and 15,000 equity shares. On equity shares, on application 2 rupees is there, on allotment 3 rupees, first call it's 2 rupees 50 paisa and second call is also of 2 rupees 50 paisa. Preference shares 2 rupees 3 rupees and again same. Okay, so all the shares were fully subscribed. Okay, all the shares were fully subscribed except the final call on 100 shares, and on 200 shares, 200 preference shares, the final call was not received. Okay, all of you please remember that company is offering 10,000 preference shares and 15,000 equity shares. On application on both the classes of shares it's 2 rupees, allotment it is also 3, first call also of 2 rupees 50 paisa and second call is also of 2 rupees 50 paisa. Now see, the first entry on 15,000 equity shares at the rate of rupees 2, 30,000 is received. The first entry will be bank account debit to equity share application, in the same manner in case of preference share also. Okay, bank account will be debited, equity share application and preference share application will be credited. That's why on the debit side we are showing this 20,000 and 30,000 rupees. Okay, now the second entry will be passed when the application money received on equity shares and preference shares will be transferred to equity share capital and preference share capital. Equity share application 30,000 is transferred to equity share capital. Similarly, the preference share application is transferred to preference share capital. Okay, second entry. Then the third entry will be when the allotment money is made due, 3 rupees. On 15,000 equity shares at the rate of rupees 3, 45,000 will be made due, and in case of preference shares at the rate of rupees 2, 3 into 10,000. Okay, allotment money is 3. Okay, so equity share capital and preference share capital both will be credited. So allotment money is made due, and when the amount is received it will be recorded in cash book. Okay, see this 45,000 rupees. Okay, and 30,000 rupees on equity shares and on preference shares it is received. There is no calls in arrear, full amount is received. Okay, then 2 rupees 50 paisa on first call. Okay, so 2 rupees 50 paisa on equity shares and 2 rupees 50 paisa on preference shares. On equity shares there are 15,000 shares, so 15,000 into 2.5 it is 37,500 rupees. Okay, 37,500. And in case of preference share on 10,000 shares at the rate of rupees 250 it is 25,000 rupees. Equity share capital and preference share capital both will be credited. Now when the amount is received, it will be recorded in the cash book. See, first call is received, and for equity shares and preference shares, full amount is received. Okay. Now see, when the second call is made due, we have to remember that on 100 equity shares and 200 preference shares, the amount is not received. Now see, second call is made due, equity share, second and final call at the rate of rupees 2 rupees 50 paisa on 15,000 shares, 37,500 rupees will be made due. And on this preference shares on 10,000 at the rate of 2 rupees 50 paisa, 25,000 rupees is made due. Now as per the question, on 100 shares 2 rupees 50 paisa is not received on equity shares, so calls in arrear will be debited and equity share second call will be credited. In the same manner, on 200 preference shares at the rate of rupees 2.5, 500 rupees is not received. Now the amount received will be shown in the cash book. Okay. Out of 37,500, 250 is not received for equity shares, so 37,500 is received. And in case of preference shares, 500 is not received, so out of 25,000, 24,500 is received. Total cash received is 2,49,500.